Now, their primary focus is not on trying to get inflation down straight away. They can't do that. Their focus is on what happens as the cost of living for you and I goes up. Will we pass that on in the selling prices for the business products that we make and sell into our wage demands, etc.? The Reserve Bank, we've just seen, has increased its official cash rate by 0.5%, so it now sits at 1.5%, which is broadly where we were back in the middle of 2019 when the Reserve Bank was cutting interest rates because inflation was surprising on the low side. Between about 2012 to 2019 in New Zealand, inflation averaged only 1.2% per annum, and that is broadly the underlying fundamental for inflationary pressures these days in New Zealand and overseas. So when you embrace that, you can understand why when we see inflation in New Zealand currently 5.9%, heading towards something over 7%, there's an element of believing that this is very much a temporary thing. And in fact, the Reserve Bank explicitly said that the surge in inflation above 7% is primarily due to supply chain disruptions around the world, and of course the increase in commodity prices associated with Russia's war against Ukraine. Now, their primary focus is not on trying to get inflation down straight away. They can't do that. Their focus is on what happens as the cost of living for you and I goes up. Will we pass that on in the selling prices for the business products that we make and sell into our wage demands, etc.? That's primarily what they're going to be keeping a close eye on. And in that regard, I thought maybe in their announcement they might issue some really strong warnings about, you'd better not go and demand a big increase in wages or put your selling prices up, or we'll have to throw the economy into recession, something like that. They haven't done that. They really haven't dragged out the scary words weapon as yet. That's still something I guess they're keeping in reserve. They might be looking at doing that later on this year. We'll just have to see how that goes. Now, of course, they noted that the unemployment rate in New Zealand at 3.2%, it's not really a rate which is sustainable in New Zealand, and yet it's probably going to get lower, especially as we've now just seen an estimate from the MBIE government department there that over the next 12 months somewhere between 50,000 and 125,000 Kiwis are likely to go overseas. Mainly they're going to go across to Australia with the vibrant jobs market, higher wages, cheaper house prices, lower cost of livings, all the things I've been talking about for quite some time. In fact, you go back about 18 months ago, I was saying that one of the things that's going to come along when the borders open up is probably a brain drain. The 1 million Kiwis overseas are not going to come flooding back to New Zealand, and many of us in New Zealand are going to be looking to spend some time increasingly overseas to maybe build up a nest egg, earn some more money, or whatever. And that's interesting because that means some extra downward pressure on house prices, fewer people looking to buy houses, but it also means that wages pressure risk still remains out there. I think what you can reasonably expect is that the Reserve Bank will keep increasing interest rates, not 0.5% a time. Let's assume 0.25% for each of the reviews remaining for this rest of this year, and this time a year from now, probably I think their cash rate will have peaked at 3.25%, or personally I think 3% is going to be the high. That means in the world of economics and things looking forward over time, you are probably going to see the peak levels for fixed mortgage rates, let's say for 2 years and beyond, before the end of this year. The peak for the 1 year rate, maybe that's around about this time next year in 2023. And that's when I expect to be talking a lot more about the challenge of not fixing in at a long-term rate then, which you wouldn't touch it with a barge pole at the moment, or certainly when it was down at 2.99%, but that's something for the future. Anyway, the upshot is interest rates are rising in New Zealand, and if I were borrowing at the moment, I would probably look at fixing maybe in the 2-year area, because I anticipate that the Reserve Bank will be cutting interest rates again at some point in 2024 into 2025. But that's a wee ways down the track. All the best for now.